Something huge just happened in the tax world, and most people have no idea yet. For decades, taxpayers have been using terms like financial year and assessment year when filing taxes. Accountants built entire systems around them. Software platforms were designed around them. Millions of taxpayers learned how to navigate them. And now, suddenly the government just decided to delete that entire system and replace it with something new. Starting April 1, 2026, the old Income Tax Act of 1961 begins its transition into the brand new Income Tax Act of 2025, and with it comes a completely different structure. New terminology, new forms, new filing logic. Even the documents your employer gives you are changing. In fact, one of the most familiar documents in the tax world, Form 16, is disappearing and being replaced with something called Form 130. And when I first read about this, I realized something important. Most people think this is just another boring tax update, but it is actually one of the biggest structural changes to the tax system in more than 60 years. So today, I want to walk you through what is actually changing, why your old filing habits might suddenly become obsolete, and what this entire overhaul means for the way we handle taxes going forward. Before I dive into the details, make sure you subscribe to Dave Invests Smart, because on this channel I try to explain complicated financial systems in simple language so you and I can make smarter decisions with money instead of getting confused by technical jargon. Let me start with the biggest conceptual change in this new tax law, because this one surprised me the most. For decades, taxpayers had to understand the difference between something called the financial year and the assessment year. The financial year referred to the year in which you earned your income, while the assessment year referred to the year in which that income was evaluated and taxed. For example, if you earned income in 2024, you filed taxes in 2025, which created this strange one-year gap that confused millions of people every single year. Now imagine trying to explain that system to someone filing taxes for the first time. I have seen people stare at those terms and ask the same question over and over. Wait, if I earned money in 2024, why am I filing in 2025, and why is the form asking for something called assessment year? It created a layer of confusion that even experienced taxpayers occasionally misunderstood. The new tax framework is trying to eliminate that confusion completely. Instead of using two separate terms, the new system introduces a single concept called tax year. Under this approach, the year you earn income and the year that income is taxed will align under the same terminology. When I first heard about this change, I immediately thought this is probably the simplest but most powerful reform in the entire overhaul. It removes one of the most confusing pieces of tax terminology that has existed for decades. But terminology is only the beginning of the transformation. Another major change involves the actual documents used in the tax filing process. If you have ever worked a salaried job, you probably know about Form 16. It is the document employers provide every year showing how much salary you earned and how much tax was deducted from your paycheck. For millions of employees, this document is the starting point of their entire tax filing process. Well, that document is being replaced. Starting in the new system, Form 16 is being renamed and redesigned as Form 130. At first glance, this might sound like a simple name change, but when I look deeper, I realize there is more happening behind the scenes. Form 130 will provide a more detailed breakdown of salary components and tax deductions. Employers will now include clearer structures for salary elements and deduction categories, which should reduce errors when filing returns. One of the biggest problems in the current system is that taxpayers often struggle to reconcile salary data with deductions and tax credits when preparing returns. The updated format aims to create better transparency between payroll data and tax filings. In other words, the government is trying to standardize how income information flows through the system. And when you think about it, that makes sense, because the entire philosophy behind the new Income Tax Act appears to be simplification. Officials have repeatedly described the overhaul as an attempt to streamline compliance and make the system easier to understand for ordinary taxpayers. But here is where things get really interesting. Even though the new law officially takes effect in April 2026, the transition will not happen instantly. For a period of time, taxpayers may actually have to deal with both the old and new systems at the same time. When I read that detail, I immediately imagined the confusion that could create. Imagine filing taxes where some rules follow the old law while others follow the new law, depending on which year the income belongs to. Income earned before the transition will still be governed by the older framework, while income earned afterward will fall under the new legislation. This means accountants, tax software companies, and even the tax department itself will have to manage a temporary overlap between two legal systems. That might sound messy, but it is actually a common approach when governments introduce major legal reforms. Gradual transitions reduce disruption and give people time to adjust to the new system. Another interesting aspect of the overhaul involves changes to allowances and deductions. The new rules adjust certain benefit categories, such as housing allowance, meal benefits, education allowances, and various employment-related perks. These updates may seem small individually, but collectively they influence how salaries are structured and how taxable income is calculated. Whenever tax laws change, employers often redesign compensation packages to optimize tax efficiency. That means HR departments, payroll systems, and financial planners will all be analyzing the new rules very carefully. And that leads to something I find fascinating about tax reforms. Most people think tax laws only affect the moment when they file returns. But in reality, tax policy shapes the entire economic system. Companies adjust salary structures. Employees change investment strategies. Financial advisors redesign planning frameworks. Even government revenue projections shift based on how taxpayers respond to new incentives and deductions. So when a country replaces a tax law that has existed for more than 60 years, it is not just a technical update. It is a structural reset. Another major change happening alongside the new law is the modernization of the tax filing infrastructure itself. The government has revamped the online tax portal to support the new system, with updated return forms, new payment modules, and improved verification tools. That may not sound exciting, but digital infrastructure plays a huge role in tax compliance. When filing systems are easier to navigate, more people file accurately and on time. Think about how much tax filing has changed over the past 20 years. People used to fill out paper forms manually and physically submit them to tax offices. Today, most taxpayers complete the entire process online in minutes. Digital transformation has already simplified taxation dramatically, and this new overhaul appears to be pushing that modernization even further. But here is the part one personally find most important. Even though the structure of the law is changing, the government has emphasized that the reform is not designed to suddenly introduce new taxes. The goal is primarily simplification rather than increasing tax burden. That distinction matters because major tax reforms often create fear among taxpayers who assume the government is secretly raising taxes. In this case, the emphasis appears to be on reorganizing and streamlining the existing system, rather than dramatically changing tax liabilities. Of course, the real impact will become clearer only after taxpayers start filing under the new framework. And that brings me to something I always remind myself when reading about policy changes. The most important question is not just what the law says. The most important question is how people actually respond to it. Tax systems are behavioral systems. They shape how people invest, save, spend, and structure their income. When terminology changes, filing procedures change, and documentation changes, it forces millions of taxpayers to adapt their habits. Some will adapt quickly. Others will take years to fully understand the new framework. And during that adjustment period, there will likely be confusion, mistakes, and learning curves. But over time, the hope is that the simplified structure will reduce complexity and make the tax system easier to navigate for future generations. When I step back and look at the big picture, this reform represents something much bigger than new forms or new terminology. It represents the modernization of a system that was originally designed in the early 1960s. The global economy has changed dramatically since then. Digital income streams, remote work, international investments, and online financial platforms have transformed how people earn and report income. Updating the tax framework to reflect that modern reality was probably inevitable. So if you hear people talking about the disappearance of assessment year, the arrival of something called tax year, or the sudden appearance of Form 130, do not panic. What we are witnessing is the beginning of a long transition toward a simplified tax structure designed for a modern economy. But like every major financial reform, the real impact will unfold gradually as taxpayers, accountants, businesses, and government agencies all adjust to the new system. And if you are someone who likes staying ahead of financial changes, understanding this shift early can give you a big advantage. Because the people who understand financial systems before everyone else usually make the smartest decisions. If you found this explanation helpful, subscribe to Dave Invest Smart, because my goal with this channel is simple. I want to break down the biggest financial and economic changes happening around us, so you can stay informed, confident, and one step ahead when it comes to money.